Hi guys, I'm Phil Town from Rule One Investing, and today I want to talk to you about the types of investments that will help you set up a hedge against inflation. The latest inflation numbers are out, and surprise, surprise, the rate of inflation is still really high. Okay. Now, despite recent increases in the interest rates, which the Federal Reserve did twice now recently, and despite speculation around the recession that we are in, with the federal government saying, oh, we're redefining a recession, although it has been defined so clearly over the last many, many decades. We're in one, all right? We're in one, no matter what you hear in the news. So despite all that, people are still spending money, which is amazing, and the employment rate is very low. So this is a weird place we're in right now. The Fed has said that you can expect more aggressive interest rate hikes in the coming months, and that, they hope, will eventually dampen inflation. But they're also afraid that's going to throw us into a recession, because when the economy slows and people stop spending, guess what? You get a recession. And sometimes that means prices can continue to rise, which is really crazy. So we're in a real weird place. If you want to know that you're doing everything in your power to protect your wealth during this time, what I want you to do here is just download my inflation checklist. It's really handy, and it's linked in the description below. Now, part of protecting your wealth means hedging against the damage that inflation can cause to your savings and your portfolio by investing in businesses and commodities, and this is key, that will hold their value and continue to produce great returns even during recession. So let's cover a few of the different types of investments, which, ones would protect you and which ones won't. Now, to start, bonds, which are classically a safe place to invest, are a really bad idea as interest rates start to go up, because they lock you into a certain interest rate. And if you purchase a bond at a 3% interest rate when inflation is at 8% interest, you are losing 5% per year on that deal. That's not great. Now, real estate can decently hedge you against inflation because real estate prices tend to rise with inflation, which is good. However, this is only good if you have the cash, or you can get a really good interest rate when you buy real estate. But as we know, there's a catch, and that is, as interest rates rise, so do the mortgage rates for real estate, and paying a ton of interest on your investment and a piece of real estate will cut into any potential returns big time. So that becomes iffy. Now, gold may also be a good choice, as the price of gold does rise with inflation, but not probably the best choice, because over the last 200 years, gold has only increased your wealth by 3 to 1 relative to stocks, which increased it 1,000,000 to 1. 3 to 1 versus 1,000,000 to 1. So gold, maybe not the best choice. But now, let me tell you what the best thing is. I know you probably got a clue right there. The best thing you can do to protect your money from inflation is invest in companies that have big moats. These are what we call anti-fragile companies. That means they are really, really more successful when things get bad. And they have a huge leg up on the competition, which means they don't have to compete by lowering their prices. They can raise their prices as the costs go up. They can continue to turn a profit even in the midst of these rising costs. So a big moat company also means a company that is very likely that it won't lose a large number of customers if we run into a recession. The customers are kind of locked in. They have a need for it, okay? Now, another good move is to transfer money from countries which have high inflation to those that are experiencing lower rates of inflation. So for instance, right now, the dollar theoretically is losing its buying power because it's inflating. So you'd think it might be a good idea to invest in countries outside the United States. Well, the catch is those countries are losing their buying power even faster than the dollar. And as a result, the dollar is going up against those companies' currencies like the euro and the yen. Makes things really complex out there, right? So I got to tell you, probably the best thing for you to do is just buy really good companies in the US, or if you're overseas, buy them in the country that you're in, and then just hope that those companies can continue to do what you expect them to do, which is to fight off inflation by having a big moat product. Now, with the latest numbers of inflation over 8% a year, the average rate of return from the S&P 500, it's not going to cut it, you guys. Imagine if you got inflation at 8% and the S&P returns 7%. You're losing 1% per year. Now, you need to be investing. You've got to do it. I know, bite the bullet. You don't want to, but you've got to, in businesses that will help you grow your wealth. Otherwise, you just could be losing money day after day. And the best way to invest right now is in great companies with great big moats and those that aren't stuck just with one currency. I love the idea of US companies that also have a big amount of capital coming in from all over the world. Think Coca-Cola, for example. Now, I'd love to hear from you guys. Where are you putting your money to hedge against inflation? Leave a comment below with your answer. I'll be sure to follow up with you. Thanks for watching. Now go play. You guys, if you enjoyed this video and you feel it was valuable in teaching you more about the types of investments that will help you hedge against inflation, hit the like button and please share the video with your friends. Oh yeah, if you want more investing content, subscribe to my channel. And don't forget to click the button. We got a free gift for you right there. And thanks again for watching.